So all eyes on the MPC as Mashudu speaks. We know that inflation came through yesterday, ticking up 19.7%. So I'd say that they've really got their work cut out for them.
Yes, they now really have to, I guess it's move away from the textbook, move away from sentiment, move away from politics and make the right decision. And basically, yeah, they have to trade a very thin line.
Okay, what would the right decision be? Because already with the interest rates having changed cycles over the last 3 months, we're seeing the cost of borrowing rise significantly, and that started to really affect corporates. You know, we were told yesterday that overdraft levels, for instance, the repayment rate is 25%. Those kinds of figures are being bandied about.
The right decision to make is a bit tricky one. In my opinion, the right decision to make currently actually is to hold the rates where they currently are. I think they've raised the rates enough. If they are to raise rates further, it will be maybe by another 200 basis points, 250 basis points to near it up to inflation. Because we need to take into mind that the time lag between a policy measure, especially for a monetary policy, to take effect might be a month, 2 months, 3 months. So we expect inflation as we get into 2012 to either stabilize around the 19, 20 mark or 21 mark before starting to ease. But basically what they've basically done now is they've tightened liquidity in the market. They've tightened the flow of the shilling in the market. Interbank rates are at high of 35%. So they've managed to achieve that side of the equation.
There is a call for the central bank to shore up the shilling because obviously with inflation rising and the fact that Kenya imports a significant proportion of consumer goods, that you should just try to ease the pressure on people's pockets, and that would mean affordability, that would mean keeping the shilling a little bit buoyant and strong.
Yes, basically, and that's what they've basically been doing. They've really not been fighting inflation directly. They've been trying to show up the shilling to try and cover the side of imported inflation. If you've noticed from January up to now, they've managed to slow down or stabilize the growth of broad money of M3 to around below 15%. From a high of 25, 30% a year ago, even 2 years ago. So with money supply contained, the next thing they had to do now is tighten liquidity. By doing that now, you make the shilling scarce and you increase demand on the shilling. And at the same side, you have cut supply of the shilling. So demand of the shilling, high interest rates will make the currency to appreciate, which will cover the import side of the business. But if they continue now raising the rates higher, it might end up becoming counterproductive because you will squeeze the same people that you're trying to help to import cheaply through high borrowing costs and unfavorable operating environment.
Let me ask you to cast your eyes on events in neighboring Tanzania. It's the share sale for Tanzanian breweries. People expect it to be oversubscribed. It closes on Friday. What bearing is that going to have on East African Breweries Limited? Because they're also involved in a transaction to get their stake back regarding Tanzanian brewers as well. So how do all these issues come to play?
Yes, the IPO will be oversubscribed or fully subscribed. Tanzania has not been having so much noise macroeconomically like Kenya has. So, and they seem like they are beginning to open up to foreign investors, which will actually help the IPO. In terms of breweries, they just got a loan the other day from their major shareholder of close to 16 billion, if I'm not wrong, Kenya shillings to help them buy their stake. So in effect, really, it won't really play so much because they've actually secured their funding, which I'm sure is at reasonably cheaper cost than any other form of funding they would use. It has saved them from a rights issue, and I think the management will be happy.
Okay, the gainers in today's market are companies like Trans-Century, which has really had a bumper ride on the market. Ati River, that's to be expected. They've had very good results. City as well. But the movers in the market are banks like Equity, Barclays Bank of Kenya, and then, of course, the market darling Safaricom. When you look at some of these companies, what piques your interest? What says to you that's probably where you should be going?
For the gainers and losers today, really there's nothing much that really catches the eye. Because if you look at the volumes that are traded on these counters, they're so insignificant. On the movers are the usual culprits because they have the largest number of shares in the market. They are the most liquid, and they become the darlings of foreigners. In terms of fundamentals, yes, equity and maybe Barclays might look very attractive currently, and Barclays and Equity are the only actually banks that have double-digit dividend yields, still below the treasury bill rate, but their dividend yields around 10%, 13%. So if someone is just picking for dividends, those are the two banks that you can go into.